Hello everyone, my name is Oliver from Lux Trading, and today I'll be sharing 3 strategies that you should absolutely avoid if you don't want to find yourself in over your head and with no returns. Hey everyone, I just quickly want to jump in before we start the video. We have launched a new Discord server where you can chat with us, with the members of Lux Trading Firm, and with our other traders. So definitely go and check that out in the link down below. And let's get back to the video. First up, let's talk about the worst offender, the Martingale system trading strategies. The Martingale system is a classic example of how not to trade the markets. It involves doubling down on losses from prior trades until the loss is recovered by a positive outcome. Unfortunately, this all or nothing trading approach comes with some pretty severe drawbacks. For example, if a trader risks $100 on a trade and then loses, now they need to risk $200 just to get back to zero. Next is $400, $800, $1,000, and it takes only 10 losing trades in a row for you to be down 100,000. So when you double down every time you lose, you could quickly end up betting hundreds of thousands or even millions of dollars just to get your $100 back. This trading system is unsustainable, as a lot of times it works because most of the time you're gonna have maybe 3-4 losing trades in a row. But there are gonna be those times when you lose 10 or 15 trades in a row. In a career of any professional trader, just go look and you'll see there's nobody who has never lost 10 trades in a row, and nobody has an infinite amount of money to keep doubling up every single time you lose something. So the biggest danger of this strategy is that it works a lot of times, but when it doesn't, it is a disaster. So just please stay away from Martingale trading systems. The next type of strategy that you should avoid is grid trading. Grid systems involve placing multiple orders at different levels with the aim of profiting from the small price movements in each direction. Unfortunately, this strategy is based upon the notion that markets move in a predictable fashion, which often is not true. The main problem with grid systems is that they force traders to place a large amount of trades at the same time, which significantly increases your risk exposure. Additionally, these trades will be placed over a wide range of prices and time frames, making it difficult for traders to accurately predict market movements and manage their risk accordingly. Furthermore, if the market moves against you unexpectedly or quickly reverses direction after a little bit of an initial gain, then all of your positions are liable to suffer heavy losses from either margin calls or slippage. Another issue with grid systems is that they tend to generate high transaction costs, as every order you place in the market comes with a commission and a spread. That means that even if you can make a total profit from this strategy, that is very often offset by the amount of cost that you pay in commissions and spreads. And when your fees cost as much as you're making with that strategy, it is not profitable. So stay away from grid systems, as most of the time they end up not being worth it. And last, and maybe a little bit controversial, is news trading. Now, there are plenty of news traders out there, but I mean this mostly for beginners or traders who are not specifically news traders. Trading the news can be very risky, as it involves trying to predict how markets will react to a certain event. While some traders believe that they have an advantage by following and reading the news, often that is not the case. You should understand that there is an entire industry of automated trading bots that has made it extremely difficult for traders to make money trading the news. The algorithms that I'm talking about are used on Wall Street. They're used by big banks spending hundreds of millions of dollars into hiring quantitative analysts and building algorithms that are able to interpret, read, and understand news stories within milliseconds, meaning that any potential profits from quickly knowing the news are likely already taken by the machines before you even have the chance to read the first sentence. On top of that, large trading algorithms pay huge amounts of money to get their information just a couple of milliseconds later, because that is what the edge is in that market today. You reading your news on Bloomberg or your local news outlet is already way too late compared to how fast the algorithms can process, understand, and trade based on the news. In addition to all of that, many times when major economic releases come out, they can cause large swing in the prices, which can be really difficult for ordinary traders to handle without high frequency algorithms and systems used by institutions institutional investors. As such, these type of situations more often than not just lead to losses. So while some experienced professional traders are able to make profit trading the news, it is definitely not something I would recommend for a normal day-to-day trader. It has simply gotten way too competitive for a normal human being to be able to compete in that space. So if we sum it up, the three worst offenders in terms of strategies are definitely martingale systems, which are simply unsustainable, grid systems, which more often than not end up not being profitable, and trading the news, which has become way too competitive. So what I would recommend is staying away from these three strategies. We have posted some simple strategies you can follow on our channel, so maybe go check out those videos. And if you like this video, don't forget to share it, like it, subscribe down below. And if you want to get in touch with us, feel free to message our 24/7 live chat, send us an email at info@luxtradingfirm.com or join our Discord server. Thank you for watching. My name has been Oliver, and I wish you all a great one.